All right, let's open this up now to about a 10 or 15 minute question and answer period. And we start out here with first question on a non-trending 6 to 10 bar. Would the uptrend with the pennant show as a trend on a shorter time frame? Good question, because I like to use combinations that way. I can't say, I'd have to sketch it out myself, but typically you see patterns within patterns. And if you start with a top-down approach, you want to look at, say, the bigger time periods. So say you come up with a 1440-minute pattern, and you go down to a 240-minute, and a 60, then a 30, and a 15. So what you want to do is you want to look for what the dominant pattern is. And if the dominant pattern and dominant trend is up, then you want to see your shorter term patterns trade in the direction of that dominant trend. So if you're in an uptrend on a daily chart or a 240-minute chart, then what you really should do to try to increase your odds of success is to look for patterns on a smaller time period that are trading in that particular direction. Okay? So in this case, it's possible that you could have a pennant that's showing up as non-trending, but inside that pennant you could have a trending pattern in a shorter time frame. So I'd have to say that yes, you could have a trending pattern inside a non-trending pattern. Hope that answers the question. And what is the difference between trending chart and non-trending? I think we answered that a trending pattern tends to have parallel lines that never cross, and they tend to stay, there tends to be some uniformity between the distance between the two. And non-trending typically is a triangle which starts out wide and compresses. So eventually you have a point where the two lines have form an apex, and the market breaks out in either direction. Can you talk? Let's see. Let's see. What does it say here? Power stats. Yeah, I can talk about power stats here. Let me finish these questions. I'll go back to it because I have to look at a different slide. What indicator you prefer to use to confirm the momentum on a low initial trend rating? I think you probably mean indicator, Autochartist indicator, or conventional indicator, say an RSI or some kind of stochastics. So I'm going to answer it two ways. When you have a low initial trend pattern breakout and the pattern is a non-trending, that would mean that there's compression and that the market has compressed so much that you know there's going to be a breakout, but you're not sure. Once it makes it move, you can look at any volatility indicator such as an ATR. So you look at the average true range. Maybe that's your confirmation. As it begins to break out, if you see an expansion on a Bollinger Band, that's another volatility indicator. That may give you further support that that is going to be a valid. You may also get a crossover on a relative strength indicator or a stochastics indicator. So what Autochartist will do is it'll show you that there's compression taking place and the volatility is due. But if you need some more help to pull the trigger, then by all means look at the ATR for volatility and look for some kind of top or bottom indication like relative strength or stochastic. All right, one more question here is what figures are more successful in my opinion? First of all, personally, I like the triangles. I think that if you're going to watch as many markets as I do, if you can set up, and one of the best things about Autochartist is this emerging pattern section, because it's telling you these things are ready to go. And if you're looking at an emerging pattern, you have that list in your bullpen, you're waiting for it to go. You start to see triangle patterns come up then that tells you that this market is coiling and there's uncertainty, and that you should be waiting for something to happen. And so by that time, you can get your ducks in order, you can get your money lined up, you can make yourself comfortable, because the market's going to tell you which way it wants to move. And sure, sometimes there's failures and there's whipsaws too, but it's not necessarily the pattern, it's just the volume behind the pattern. All of these patterns work great when there's a lot of activity in trading. So you always want to make sure that you're trading during the active time periods. Believe me, I've known that. Trying to trade during lunch, for example, in the U.S. is the worst time. They'll lay every pattern they have out there for you, but without other traders there to push the patterns up or down, it's miserable. But if you trade during the, for example, the Forex overlap, when you have the UK and the US overlap, those tend to be true patterns, because once they make the move, the institutions will get behind it. And so you want to use these auto chart as triangle patterns to help you predict when the market's going to move, but not necessarily the direction. So that's my personal preferences. I prefer the triangle patterns. And if I was going to say which pattern is most successful, believe it or not, pattern I think is most successful for hitting the targets are head and shoulders and inverse head and shoulders patterns. That was last week we did a webinar on the head and shoulders. Next week we'll do inverse head and shoulders. But as far as accuracy and hitting a target, a minimum objective, that tends to be the best. And I think it's because if you're traders who use those patterns tend to follow the rules of and measure the distance between the head and the neckline to forecast the next area. So they seem to adhere to the actual rules, as opposed to some of these other patterns where they just let them go to any level they feel like. But the inverse head and shoulders and the regular head and shoulders are really good. Let's see what other question we have here. I like scalping. How do you apply best the chart information? Well, if you like scalping, I don't know if you're a scalp trader where you like to take out offers or take out bids, or if you like to trade swings. If you're going to trade swings, then you'd want to use something like a channel where you're going to have wide swings in the marketplace. See if we can get a chart to come up here. You can see that when you get a channel, you get these wider swings that give you an opportunity to sell, buy, that type of action. When you trade triangles, you tend to get this compression. So when it's compressing, it's very difficult to get any kind of movement as it's shrinking down. So to be really quick about it, if you're going to scalp, use a swing system and trade support resistance inside channels. And then when if you're going to use breakouts, then you want to look at triangles for breakouts, and that'll help you. Also, if you're a scalper and you like momentum, then definitely a triangle pattern on, say, a 15-minute chart would be good for you, because the whole pattern is based on momentum. And so if you get in on momentum, as soon as the momentum ends, you can exit and start over again, which is the way I scalp a market. I'll be in on momentum and I'll be out as soon as the momentum stops. Let's see here. I received the trend alert sound plus or minus 10 minutes after the pattern end. Is there any way to receive them earlier? I'd have to look at how that's happening, because what happens is, like any kind of swing indicator, any kind of pattern identification program, we're not trying to pick tops or bottoms with this program. So sometimes if you define pattern end as when a market stops going up, well, you have to allow a market to stop going up and then perhaps break 2 bars before you actually get a a valid signal or a valid pattern. So the software is not going to pick exact tops and bottoms, but what it's going to do is after a market makes a top or a bottom, it's got to look at one or two bars to decide. The software program's got to decide whether that's a valid top or bottom or not, and that may be what you're explaining there. But sure, you will get after it makes a top or a bottom, you will not get a clear picture until it confirms, and that's what we're doing here is we're confirming it. All right, looks like all the questions have been answered. Hopefully you enjoyed the webinars. Thanks for sticking around. Next week we'll be doing inverse head and shoulders, and we'll be moving it to a Thursday. So we'll get a bigger audience. We have Ben Bernanke speaking next Friday, and he kind of knocked me out of the box. So I changed my date to the next webinar on Thursday. So thanks again. Have a great weekend. Appreciate it.
The organizer has ended this